An economic calendar in trading is a tool that shows upcoming economic events, data releases, and policy announcements that can impact financial markets. Traders use it to plan trades around key events like interest rate decisions, inflation reports, GDP data, employment numbers, and speeches from central bank officials. Each event on the calendar is listed with a scheduled time, the country it relates to, and the expected level of impact, usually marked as low, medium, or high. High-impact events, such as the US non-farm payrolls or a Federal Reserve interest rate decision, can cause significant volatility in Forex, commodities, stocks, and indices. The calendar also displays previous data, forecasts, and actual numbers once released, allowing traders to compare results and anticipate how the market might react. By knowing when these events occur, traders can avoid entering trades during unpredictable moments or prepare for opportunities that come from price swings. For example, if a trader sees that inflation data is about to be released, they might avoid opening a new trade in a related currency pair or prepare for a short-term breakout if the data deviates from expectations. Economic calendars are updated in real time and can be filtered by currency, importance, or region to suit individual trading strategies. This makes them especially useful for day traders and swing traders who rely on timing and volatility. A well-timed trade around a major event can yield fast results, but the risk is also higher, so many traders use tight risk management and watch closely for confirmation. Some traders use the economic calendar to guide longer-term positions too, especially when looking at trends related to inflation, employment, or central bank policy. Overall, the economic calendar is one of the simplest but most powerful tools in trading. It helps traders stay informed, manage risk, and take advantage of opportunities when big market moves are expected. Without it, a trader might get caught off guard by a sudden spike in volatility or miss the chance to position ahead of a key release. It doesn't matter whether you're trading Forex, stocks, or binary options. Keeping track of economic news is essential. Even technical traders who rely mostly on charts often consult the economic calendar to avoid getting trapped in sudden price movements caused by unexpected data. In short, the economic calendar gives traders an edge by keeping them aware of what's coming, what might shake the market, and how to respond with a plan. It's a habit every trader, beginner or advanced, should build into their daily routine for better decisions and fewer surprises.